Today we're diving into Eli Lilly's major move to acquire Morphic Holdings for a whopping $3.2 billion. So, what's the deal? Well, Eli Lilly is set to gain access to Morphic's promising drug, Morph-057, designed to tackle inflammatory bowel disease like ulcerative colitis and Crohn's disease. But that's not all. This acquisition brings a potential goldmine of future treatments targeting IL-23 and TL1A, which could change the game for IBD patients. Now, it's not all smooth sailing. There are risks on the horizon. What if Morph-057 doesn't deliver the results Eli Lilly is hoping for? Or if Morphic's other pipeline candidates fall short? Stick around as we explore how this massive deal could reshape the IBD market, what it means for Eli Lilly's future, and whether this investment might be a risky bet or a strategic win. Eli Lilly is set to acquire Morphic Holdings for $3.2 billion, a move that brings promising advancements in the treatment of inflammatory bowel disease, IBD, and a robust preclinical pipeline. With this acquisition, Eli Lilly gains access to Morph-057, a Phase 2b asset specifically designed for IBD treatment. Morph-057 is an oral candidate targeting the A4V7 receptor, which is critical in conditions like ulcerative colitis and Crohn's disease. This acquisition aligns with Eli Lilly's strategy to diversify its pipeline beyond its well-known focus on obesity treatments. Morph-057 is particularly attractive to Eli Lilly because it targets the same receptor as Takeda's Entyvio, a well-established treatment for IBD that generated over $5 billion in global sales last year. Unlike Entyvio, which is administered intravenously or subcutaneously, Morph-057 offers an oral option, potentially providing a more convenient alternative for patients. Even if Morph-057's efficacy is slightly lower than Entyvio's, its oral administration could still make it a preferred choice for many. In addition to Morph-057, Eli Lilly also acquires Morphic's platform of preclinical oral candidates. These candidates target other significant and validated receptors, such as IL-23 and TL1A, currently dominated by subcutaneously administered antibodies. This pipeline further enhances Eli Lilly's portfolio, offering long-term growth potential. The financial terms of the deal involve Eli Lilly paying $57 per share for Morphic, which is a 79% premium to Morphic's previous trading day's closing price. The acquisition, expected to close in the third quarter, is subject to customary closing conditions but is unlikely to face regulatory hurdles given the competitive market landscape. Eli Lilly's acquisition of Morphic Holdings represents a strategic investment in the IBD market, enhancing its pipeline with innovative, patient-friendly treatments and expanding its potential for long-term growth. Morphic Holdings' journey since its IPO in July 2019 has been quite eventful. Initially, the company went public at $15 per share. By March 2021, the stock reached an all-time high of $90 per share. This surge was driven by positive Phase 1 results for Morph-057, which demonstrated high A4V7 receptor occupancy, suggesting strong efficacy in future studies. However, the high didn't last long, and the stock settled into the $50 to $70 range for the remainder of 2021. As 2021 came to a close, Morphic's stock began to decline, hitting the low 20s by the summer of 2022. This drop coincided with AbbVie pulling out of a preclinical collaboration involving Morphic's integrin pipeline. Interestingly, the stock began to recover after this collaboration ended. Despite Johnson & Johnson also terminating a research and option agreement with Morphic in January 2023, the stock continued to climb in early 2023. The anticipation for Phase 2a results of Morph-057 in ulcerative colitis patients fueled a run-up in the share price. In April 2023, Morphic reported positive results from this trial, sending the stock to the low 60s by June 2023. In the small Phase 2a trial, Morph-057 met its primary endpoint by demonstrating a statistically significant reduction in the Robarts Histopathology Index, RHI, a clinical measure to evaluate disease activity. Additionally, the trial showed a 2.3-point reduction in the modified Mayo Composite Score, MMCS, from baseline and a 25.7% remission rate. However, by September 2023, the stock had fallen back to the low 20s. This decline followed the presentation of additional clinical data, which revealed that endoscopic improvement was achieved in only 25.7% of patients. This compared unfavorably to Entyvio, which showed a 41% improvement in the same endpoint during its Phase 3 trial, albeit at a later time point. Although Morphic defended the data, stating that MORF-057 achieved these results in a population with more severe disease, this did little to reassure investors. Adding to the uncertainty, CEO Praveen Tipirneni's sudden medical leave of absence contributed to the decline, though he returned to his role in early January. With no significant news in the interim, the stock recovered to above $30 per share before Eli Lilly announced its acquisition. This acquisition offers Eli Lilly a strategic entry into the IBD market with a promising asset and highlights the potential for long-term growth despite previous challenges. Morphic Holdings has advanced the clinical development of MORF-057, initiating a Phase 2b trial with top-line results anticipated in the first half of 2025. In a June presentation at the Jefferies Healthcare Conference, Morphic's management highlighted the convenience of MORF-057's oral administration, even if its efficacy doesn't match that of Entyvio. They emphasized the clean safety profile of MORF-057, comparable to Entyvio, as a key selling point. This could give it an edge over other treatments like JAK inhibitors or TNF drugs such as Humira. While some may not be entirely convinced by this investment thesis, there is a clear market niche for a safe, orally administered drug, even if it is less effective than Entyvio. Given the $3.2 billion acquisition cost, MORF-057 doesn't need to achieve Entyvio's peak sales of $7.5 billion to $9 billion for the deal to be profitable for Eli Lilly. In the long term, Eli Lilly could explore combining MORF-057 with other mechanisms, including preclinical candidates targeting IL-23 and TL1A, which are also in development for treating IBD. This could enhance the overall efficacy of these treatments. Preclinical pipeline and long-term potential. Morphic's preclinical pipeline includes promising oral candidates targeting IL-23 and TL1A. IL-23 is a clinically validated target, with AbbVie's Skyrizi having received FDA approval for Crohn's disease and ulcerative colitis. Johnson & Johnson's Tremfya has also shown positive Phase 3 results in treating these conditions. The TL1A class has seen significant M&A activity. Merck acquired Prometheus for $10.8 billion following positive Phase 2 data on its anti-TL1A antibody, PRA023. Roche acquired Telavant for $7.1 billion. And Sanofi in-licensed Teva's anti-TL1A antibody for $500 million upfront. Morphic's TL1A candidates, while still preclinical and unproven, have considerable long-term potential if they can match the efficacy of injectable drugs. These candidates could also be developed in combination with MORF-057, potentially yielding higher efficacy than each compound could achieve as monotherapy. Morphic is also developing a next-generation A4E-V7 candidate aimed at gastrointestinal conditions beyond IBD, such as eosinophilic disorders and pouchitis. Additionally, their preclinical pipeline includes potential treatments for pulmonary hypertensive diseases, myelofibrosis, and undisclosed targets. Lilly's acquisition of Morphic provides a promising opportunity to expand its IBD treatment portfolio and explore innovative combination therapies. So the pipeline are still in early stages, the long-term upside could be significant to prove effective. The biggest risk with Eli Lilly's $3.2 billion acquisition of Morphic Holdings is that they might end up with a drug and platform that doesn't live up to expectations. If MORF-057 fails to show significant benefits in the upcoming Phase 2b trial, or only demonstrates a modest improvement over placebo, the hefty price tag could seem like a poor investment. Additionally, Morphic's other pipeline candidates might not perform well in clinical trials, or could fail to make it to the clinic altogether. However, for a company the size of Eli Lilly, $3.2 billion isn't a huge sum, and the impact on shareholders is likely to be minimal, even if Morphic's pipeline doesn't pan out as hoped. Eli Lilly's $3.2 billion purchase of Morphic Holdings offers a solid opportunity to make a significant impact in the large inflammatory bowel disease, IBD, market with MORF-057, plus the potential for 2 additional oral drugs targeting IL-23 and TL1A. While the initial clinical data for MORF-057 may not be groundbreaking, it's possible that even a drug with somewhat lower efficacy compared to injectable biologics could offer long-term benefits for Eli Lilly, especially given the price they paid. This is a reasonable assumption, considering the high prices paid for similar anti-TL1A drugs by other big pharma companies like Merck and Roche. For Morphic shareholders, this acquisition represents a valuable exit after a roller coaster few years. The risk of the Phase 2b trial results now shifts to Eli Lilly, but with the deal expected to close as planned in the third quarter, it seems likely to move forward without major hurdles. Unlike many of its big pharma counterparts, Eli Lilly hasn't been aggressively pursuing acquisitions. With the potential of having one of the world's top-selling drugs in its portfolio, Lilly hasn't needed to rely heavily on mergers and acquisitions M&A to drive growth or overpay for high-risk, high-reward drug candidates. Instead, Lilly has opted for a more measured approach, making a series of smaller deals. These include their acquisition of Dice Therapeutics, a recent deal for Morphic Holdings, a $1.4 billion acquisition of antibody-drug conjugate, ADC, Specialist Point Biopharma, and a roughly $2 billion deal for Versanis Bio and its leading asset, bimagrumab, which is being tested alongside tirzepatide for cardiometabolic conditions. Lilly's core strength lies in its expertise with weight loss and diabetes treatments. Tirzepatide, in particular, holds great promise and could lead to even more approvals. In neuroscience, Lilly's recent approval of Kisunla, donanemab, which targets amyloid beta and has the potential to become a multi-billion-dollar drug, and the potential approval of another Alzheimer's drug, remternetug, suggest that their neuroscience division could expand significantly in the coming years. Projections indicate that Lilly could become a $100 billion per year company by 2030. In this light, their smaller M&A deals might seem relatively modest. However, Lilly's approach to investing in smaller, higher-risk ventures makes sense. These investments could either pay off handsomely or be written off as learning experiences. The Dice Therapeutics deal, for example, hasn't yet yielded significant positive results. Regarding the recent Morphic deal, the real value will become clear as critical data from Morphic's lead asset, MORF-057, is released this year and next. This will determine whether MORF-057 can live up to its potential or fall short compared to existing treatments. Overall, Lilly's acquisition strategy appears well-calibrated. The deal with Morphic, while reflecting a risk, could offer substantial rewards if MORF-057 proves successful. In comparison, Pfizer recently paid over $7 billion for Arena Pharmaceuticals and its drug etrasimod, now approved as Velsipity, showing that Lilly's approach is relatively conservative but strategically sound. Morphic also has other drugs in development targeting pulmonary hypertensive disorders and myelofibrosis, a type of blood cancer. Long-term, this could strengthen Lilly's oncology division, which currently generates around $6 billion annually. In essence, Lilly seems focused on making strategic, calculated investments rather than seeking immediate high returns. By betting on promising but riskier drugs, Lilly is positioning itself to potentially transform its market presence. If Lilly can continue to advance its key drugs and manage its manufacturing challenges, it could reach the $100 billion revenue milestone and possibly become the world's first trillion-dollar market cap company. This suggests that Lilly might be undervalued by up to 15% today, assuming it successfully brings at least 2 more immunology drugs to market by 2026.